The cryptocurrency world seems to be in tumultuous waters right now, and nowhere is this more evident than in the recent plunge in XRP prices. In a startling downturn, XRP has seen a precipitous drop of around 25% to 30%. Such a drop is nothing short of a black swan event, unexpected, and significantly impactful. As always, welcome back to Moneyside, your go-to spot for everything XRP related. If you're new here, don't forget to hit the subscribe button and ring the bell for up-to-the-minute updates on all our XRP discussions. Enjoying our content? Show some love by hitting that thumbs up and share your views down in the comments. While XRP's price descent is noteworthy, it's vital to contextualize it within the broader crypto market landscape. Bitcoin, the behemoth of the crypto space, witnessed a dip, but its decline was relatively modest at about 7%. Ethereum too felt the tremors, but its price retraction was limited to around 13%. However, XRP's price tumble dwarfs these figures. A 25% decline in value is remarkable and points towards the inherent volatility associated with XRP. This is not to say that volatility isn't part and parcel of the crypto market. After all, cryptos are notorious for their price swings, but a drop of this magnitude raises eyebrows and invites speculation. One possible explanation for this dramatic slide could be the recent liquidation of a staggering $796 million from the crypto market in a mere half hour. Such massive liquidation events can lead to panic selling, thereby exacerbating price drops. From a personal perspective, I had ceased trading activities in late 2021, primarily due to the emotional connection I share with XRP. When I resumed and initiated a trade at around 62 cents, the ascent to a 5% profit seemed promising. However, my emotional ties to XRP meant that I didn't capitalize on these profits. Had I been trading Bitcoin, I might have made a different decision. Perhaps the lesson here is that emotional detachment is crucial in trading. Given XRP's heightened volatility, it may be wise to consider trading other, more stable cryptocurrencies, like Bitcoin. The crypto world seems to be reeling from a series of consequential events, the most significant being a massive liquidation, the largest since the FTX collapse, marking a bottom for Bitcoin at $15,000. While this dip has everyone anxious, other events further amplify the intrigue. Coinbase, one of the leading cryptocurrency exchanges, made headlines when it secured approval from the National Futures Association, NFA, to operate as a futures commission merchant. This green light means Coinbase can offer futures contracts in Bitcoin and Ethereum. What's puzzling is the timing. Coinbase got this nod on August 16th, a day before the colossal Chinese real estate company Evergrande declared bankruptcy. The coincidence raises eyebrows and questions. Those who engaged in futures trading right after this approval would have faced severe losses. On the XRP front, its relisting on Coinbase has also stirred debates. The undercurrent suggests that despite its relisting, Coinbase might not necessarily be in favor of XRP. Observers have pointed out an uncanny trend. Whenever there's positive news related to Ripple, like the recent nod from MasterCard, XRP's value experiences a dip. And then there's BIT, another crypto exchange which introduced XRP options trading. Again, it's a mix of good news with the backdrop of potential price dip implications. Beyond these immediate developments, the bankruptcy of Evergrande provides a more significant cautionary tale. If one company's financial missteps can shake the crypto world to this extent, what would happen if major economies like the US or China face severe financial challenges? Speculation is rife that Bitcoin could plummet to a value as low as $1,000 to $3,000, a staggering 93% drop from its current standing. And if Bitcoin were to reach a peak of $90,000 before such a crash, the drop could be as drastic as 98–99%. Such a scenario sounds catastrophic, and it reinforces the belief among many that the best strategy might be to hold onto one's assets and sell at target prices rather than engaging in high-risk trading. The volatility of the crypto market is not just governed by market dynamics, but also by the choices each individual makes. It appears the crypto and financial world is in turmoil. Here's a summary of the recent key events and speculations. 1. SpaceX's Bitcoin sale. There are reports that Elon Musk's SpaceX has offloaded its Bitcoin holdings worth $373 million. This news has, understandably, ruffled the feathers of Bitcoin maximalists. However, it's essential to note that this sale is unconfirmed. W. Walsh's journal suggests that while SpaceX did write down the value of its Bitcoin by $373 million over the past year, and in 2021, it remains unclear if they sold the cryptocurrency. 2. Bitcoin address reactivation. A dormant Bitcoin address, inactive for 13 years, recently sprung to life with a transaction of 1,005 Bitcoins worth $29 million. This unexpected activity, particularly from such a long dormant address, has sparked rumors of an impending market collapse. Some believe that old, inactive addresses, possibly connected to Satoshi Nakamoto, the pseudonymous person or persons who developed Bitcoin, might start unloading their holdings, leading to significant market disruptions. 3. Evergrande's bankruptcy. The Chinese property behemoth, Evergrande, has filed for bankruptcy. While there were murmurs of this development earlier, it seems the company has now officially declared insolvency. The repercussions of this event are vast, affecting not only the Chinese markets, but global economies as well. Just weeks before this news, Jim Cramer had speculated that a recession was unlikely and China's bankruptcy was not on the cards. The reality, however, seems starkly different. 4. Chinese market intervention. Amidst this economic chaos, reports suggest that the Chinese government is urging its citizens to stop selling stocks. While the exact statement could not be verified from the details provided, if true, it hints at the Chinese government's attempt to stabilize their markets and prevent panic selling. 5. Liquidity crisis. A Chinese asset manager has declared that it's facing a liquidity crisis. This news further underscores the financial challenges the Chinese market is currently grappling with. There are speculations regarding Brad Garlinghouse, the CEO of Ripple, implying that XRP might be the primary solution to the looming liquidity crisis. Garlinghouse has previously emphasized the significance of on-demand liquidity and hinted that the crypto asset providing the highest liquidity would ultimately prevail. The current situation in China parallels the 2007 U.S. financial crisis. Evergrande, a colossal property developer, is on the brink with mounting liquidity issues. This crisis might be an early indication of what's yet to unfold globally. Evergrande's move to file for Chapter 15 bankruptcy might have triggered Bitcoin's recent price drop. There's speculation that Tether, which significantly influences Bitcoin's market dynamics, is deeply entangled with China and might be affected by the Evergrande debacle. Given that Evergrande isn't the only property developer in distress, with several others defaulting since 2021, there's fear of a cascading impact on the broader economy. Known for his accurate prediction of the 2008 financial crisis, Michael Burry has warned of a more significant downturn in stock markets. His recent $1.6 billion short position reinforces his bearish outlook. While Evergrande's debt is significant, it pales in comparison to the U.S. national debt, which stands at approximately $33 trillion. This scale of debt could magnify any global economic downturn. Recent statements from the Federal Reserve and J.P. Morgan, which downplayed the likelihood of a recession, were ironically followed by massive drops in the S&P 500's market cap. Such discrepancies raise suspicions of insider trading and potential manipulation. Despite the prevailing bearish sentiment, there remains a bullish perspective on the long-term potential of certain assets, especially within the cryptocurrency space. However, the road ahead seems bumpy, with potential pitfalls and drastic shifts. Investors are advised to be cautious, stay informed, and not take any actions based purely on speculation. Please remember, I am not a licensed financial advisor. The content presented in these videos is purely for entertainment purposes. I always encourage viewers to conduct their own research and consult with professionals before making any financial decisions. Thanks so much for tuning in. If you enjoyed the video, please give it a thumbs up and don't forget to hit the subscribe button. Also, make sure you turn on the notifications to be the first to know when I release new content. I'm excited to catch up with you in the upcoming video. Take care.